Time now for an in-depth look at the market news as we start the week. And for that, I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Dr. Kim, thank you as always for coming on.
Good afternoon, Devin.
Well, President Trump now saying he has not agreed to roll back tariffs on Chinese goods as part of a Phase 1 deal, contrary to media reports and contrary to officials in both countries. What's been the reaction to that in the markets?
Yes, actually, President Trump's denial on the agreement with China did not much affect the global equity market yet. Today, Kospi and Kosdaq both declined by 0.6% and 0.5% respectively. And the main driving force of the market for today was foreign investors and domestic institutional investors. They both sold Korean equity, but on the other side, domestic individual investors bought equities. And the Asian equity market was pretty weak today. Particularly, Hang Seng Index of Hong Kong dropped over 2.9% related to political insecurity. And Nikkei also dropped by 0.26%. In the last trading day of last Friday, U.S. market and European market slightly gained in the last moment of the last week.
Right, so not a big impact on equities, but we still don't have this Phase 1 deal ready. In the meantime, though, there have been some significant movements in exchange rates. The Korean currencies gained quite a lot against the dollar in the past few weeks. What's happening there, and what's your outlook for the Korean won?
It is correct that the Korean won has been pretty much gaining over the past weeks because of huge trade surplus ongoing. But only for today, in the Korean currency market, US dollar was intensified up to 1,161 Korean won per US dollar. And actually, it is extremely difficult, almost actually impossible to forecast the exchange rate theoretically and practically. But since you are asking me, it looks that the $1 exchange rate will be fluctuating in 1,160 level for a while. But if U.S.-China trade negotiation gets worse, there is a possibility that $1 exchange rate will move well over today's level sooner or later.
Got it. Yeah, notoriously difficult to predict exchange rates, but Korea's exports were down 20% in the first 10 days of this month. Now, this decline was mainly in semiconductors, ships, even cars. Korea's main trading partners, including the U.S. and China, are buying less. What is this doing to the local economy?
Well, since Korea is a very much foreign-dependent country compared to other major countries, export is extremely important for Korean economic growth. These days, Korean export is declining because of slowing global economy and less competitive Korean corporations and U.S.-China trade war. So if that situation altogether goes on until next year, we have to worry about the long-term recession of the Korean economy.
Right. Well, some others might feel that way too, because in October we saw foreign investors were net sellers of Korean stocks for a third month in a row. Have Korean equities lost their luster, or why is foreign money moving out?
I believe that the fundamental reason for foreign investors' withdrawals from Korean market is because Korean equity market became much less attractive than before in terms of return and the number of profitable corporations. If we take a look at other countries' equity market around, U.S. S&P 500 index gained over 22% from the beginning of the year, and even Shanghai of Chinese equity market gained over 22%. But Kospi index only gained 5%, from the beginning of this year. So I have to say that in terms of the return and the risk, Korean equity market became much less attractive to foreign investors.
Right. Well, let's look ahead at the week to come. We've got Statistics Korea releasing the latest employment data, also the Finance Ministry, a report on the economy. What are we looking for there?
First of all, employment data of October, which will be released on Wednesday, 13th of November, is a very important barometer of Korean economy today. But I believe that the numbers is not much promising as of now, particularly related to President Moon's government's economic policy performance. Employment data will attract big attention. In addition to that, two of major government economic think tanks, KDIs and KIAP, will release economic growth forecast for this year. I think that this year's economic growth forecast from these two institutions will be around 2% on annual basis.
All right, Dr. Kim, we'll be watching for those reports and we'll discuss them soon, I'm sure. In the meantime, thank you for making time today.
Thank you very much.